CNBC-TV18, embarking on a quarter century of excellence.
Welcome back, folks. Well, for now, the market could be in wait-and-watch mode as we have the RBI policy upon us. Of course, there's no rate move expected this time around, but the commentary is going to be watched out for. Let's get our entire team to tell us about all the stocks that you need to watch out for today. And the sugar mills will definitely be in focus. Sonal is here to appraise you on the latest on that front. Sonal, hi, good morning.
Good morning, Sonia. Well, sugar stocks have been under a lot of pressure in last couple of trading sessions, and finally we know why. Media reports suggested earlier that there could be some ban, or I would say mills would not be allowed to use sugarcane juice and bee molasses for production of ethanol. Instead, they'll have to divert it to production of sugar. But now the news is that they've asked mills not to use sugarcane juice only for ethanol output for 2023 and 2024. Supply of ethanol for existing offers received by OMCs from bee molasses will continue, and that is something which companies are calling a relief as well. Now, this decision would result in lower diversion towards ethanol. The current sugar production, which is at 29 million tons, could be increased by 2 to 2.5 million tons because of this step that the government has taken. Now, DAM Capital had written a note yesterday during market hours where they said that sugar production in Maharashtra and Karnataka is likely to decline by 30%, and this measure would result in reduction in ethanol volume estimates for FY25. But now we do not know what these estimates would be, because the expectation was that both bee molasses and sugarcane juice would not be allowed, but now there's some relief that only sugarcane juice is not allowed. However, they are of the view that these measures are temporary due to expected decline in sugar production, but overall earnings in FY25 could be impacted because ethanol is a high margin business for these companies, and they will be getting lower volumes from that from here on.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Abhishek. He's here to tell us about some stocks around the news. Morning, Abhishek.
Morning, Nigel. So, sources do tell us that Zomato block deal will be taking place today. So, SVF growth to sell about 1.1% stake in Zomato. The offer size is about 1,127.5 crores. So, the city is the banker to the deal, and the floor price is around 120.5 per share, which is a discount of about 1.2% to yesterday's closing price. Again, sources tell us that 5-star block is on radar. Matrix Partners, TPG Asia, as well as Peak XV to sell stake. Issue price is around 730 per share, which is a steep discount of 3.5% to yesterday's closing price. So stake sale will be about 5.87%, and there is an option to upsize it to about 8.8%. The issue size, base issue is about 1,250 crore, which can be upsized to a little more than 1,875 crore. ICICI Securities and others are the managers to this deal. Now, Titagarh Rail has launched QIP. The issue size is about 700 crores. Indicative price is around 933 per share, which is a steep discount of 4.4% to SEBI floor price and about 5.2% to yesterday's closing price. Equity dilution, that could be around 5.6% level, and Nuvama Wealth is the book running lead manager over here. Back to you.
All right. Thanks very much for that, Abhishek. More stocks with news flow. Vivek is here with that list. Vivek, hi, morning.
Well, good morning. Quite a few stocks on the radar. First on our list, IRB Infra. The company has released the November month toll updates. The November toll collections have jumped up by almost 19%. The company says this is despite the fact that during the period of Diwali, company did see subdued collections. Now, what the company is saying is that H2, or the second half of the year, is expected to be much better for toll collections, and they are now expecting the growth momentum to continue. Along with that, a new project, that is the Gujarat BOT project, will commence tolling operations soon. So, going with the green on that particular name. The other stock on our radar, Jindal Saw. The company has informed the exchanges that they are going to be holding a board meet. This is in order to consider fundraising via the QIP route. And lastly, Ircon OFS. The company has decided to go ahead and exercise the green shoe option. So another 4% equity would be divested via the OFS route. So a total of 8% equity would be divested by the government. Now remember, when you're talking about the clearing price for the non-retail portion, it has been set at 158 rupees a share.
All right, thanks a lot for that. Well, let's hop across to Upasana now. She's tracking some more stocks that are in the news. Upasana, what do you have?
First up is IIFL Securities. SAT has set aside SEBI's order dated 19th of June 2023 prohibiting the company from onboarding new clients for a period of 2 years as a stockbroker. It has also reduced the monetary penalty to almost 20 lakhs for the orders dated in May 2022. Well, next up is Electra Green Tech. The company has received LOA worth rupees almost 63 crores from Vasai Virar City Municipal Corporation of Mumbai for supply and maintenance of 40 electric buses. This order is on an outright sale basis and shall be completed over a period of 7 months. Well, next up is GSK Pharma. The company establishes an omni-channel team to expand its reach and coverage to the target segments. Company seeks to target segments by leveraging technology and improving the productivity. It has also spent an amount of almost 157 crores as a one-off cost towards the voluntary retirement scheme.
All right, very helpful. Thanks a lot for that. Well, let's do a quick recap in case you missed out on any of the stocks. Stocks with positive news flow, there's Zomato, IRB Infra, Jindal SAW, Ircon, IIFL Securities, Electra Green Tech and GSK Pharma. While stocks with negative news flow, there's 5-Star Finance and Titagar Rail. But
All right, well, those are all the top stocks we track, but Sudarshan joins us as well to tell us all the top brokerage notes that he's picked up for the day. Morning, Sudarshan.
In the list of brokerages today, we have 3 stocks from Nifty. First one is HDFC Bank. Macquarie has an outperform rating and target is rupees 2110 per share. It says company expects margin of over 4% in 4 years and management indicates RBI's action on unsecured loans was necessary. Also, management does not expect a significant increase in pricing and company expects to increase rates in the range of 25 to 50 basis points. Next one is Maruti. HSBC has a buy rating and target is rupees 12,500 per share. It says increasing CNG availability may augment its market share by 50 to 100 basis points and competition is rising in CNG passenger vehicles, but it expects Maruti to hold its share. Next one is Shree Cement. Jefferies has hold rating and target is rupees 25,750 per share. It says initiatives around energy efficiency, rail mix are driving up premium product mix and organic expansion will help reclaim leadership in EBITDA per ton and volume growth. Also, valuation premium may increase against peers if company sustains its outperformance.
okay, that's very helpful. There are a lot of brokerages coming in, especially on these consumption companies, whether it's Maruti or something like a Shree Cement as well. But let's find out what's happening in the world of commodities. One good thing for our market is that Brent crude has cooled off a lot. It's now at $75 a barrel. Manisha Gupta is with us to give us all the action from across the globe. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, yes, the Brent, pardon me, the Brent also is trading at a 6-month lows and we are headed for a weekly decline, down by nearly 6% for the crude oil prices. This is because of the robust supplies and we also are looking at the weak demand from China. The imports have declined by 9% for the month of November. Pardon me. Also, if you look at the Indian demand, after hitting a 4-month highs in the month of October, the month of November has seen a decline in demand. But all these markets are looking for the U.S. non-farm payroll data that comes in today. And ahead of that, we have seen a decline in dollar and strength in metals like gold, copper, steel. All of these are trading in the positive side.
All right, Manisha, thanks very much for that. So that's what's happening on commodities and oil, very much in focus. We'll come back with Siddhartha Khemka, Head of Retail Research at Motilal Oswal Financial Services, for some fundamental stock talk. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence.